found an article that says rising mortgage rates are causing more home sellers to lower their asking prices. This is from CNBC, April 2022. Several reports from real estate companies now suggest that buyers may be starting to get a break in this red-hot housing market. More listings are coming up for sale. Hallelujah. And home sellers are lowering their asking prices after homes are listed. The number of new listings last week jumped 8% from a year ago. Doesn't sound like much, but that is well-needed relief. This follows 4 straight weeks of annual declines in new listings. The total amount of active inventory for sale is still down about 13% from a year ago, but it may be on track given the rise in new listings to surpass last year levels by this summer. New listings tend to peak in the month of May. Prices are still well above year-ago levels. Higher mortgage rates now are also making houses less affordable. Listen to this. The average borrower is now paying 38% more than they would have for the same home a year ago on a monthly payment. So if you take the increase in the price of the house and you also take the increase in the interest rate, the effect on the payment is 38% more. So if your budget was to pay $2,000, you'll pay 38% more, which means you'll pay somewhere in the $2,700 or $2,800 for the same house. I don't want to scare anybody into going out and buying a house when you think you're not ready to buy a house, but the reality is even a little bit of change in interest rate can make a huge difference. As more supply comes on the market and mortgage rates rise sharply, this report says that sellers appear to be coming back to earth, at least a little bit. About 12% of homes for sale had a price drop during the 4 weeks ending April 3rd. That's up 9% from a year ago. The rate of sellers dropping their asking prices is now growing faster each month than it has since August. The article goes on to say price drops are still rare, but the fact that they are becoming more frequent is one clear sign that the housing market is cooling. There's a limit to sellers' power in a cooling market. Way more demand than supply, and buyers are still sweating, but sellers can no longer overprice their home. The share of consumers who expect mortgage rates to rise further increased to 69% from 67% in March, which means nearly 70% of home buyers believe interest rates are going to continue to rise. If consumer pessimism toward home buying conditions continue, and recent mortgage rates increases are sustained, then we expect to see an even greater cooling of the housing market. Now, for those of you who are listening who are thinking, hey, wait a minute, we're talking about how great the market is. Now Cleve's talking about the market cooling. We just mean the market slowing down to more normal patterns. For almost the last year and a half, really since May, after the pandemic started in March, real estate in the United States has been on a tear. People ask fairly consistently why that is, and I have seen reports that say we are anywhere from 4 million to 8 million housing units short. Historically, we add between 1 million and 1.5 million housing units. That's apartments, that's townhomes, that's single-family homes. It's housing units. And the reason we do that is because we have household creation, new household creation of somewhere between 1 million and 1.5 million every year. Well, during the recession, we were adding about 500,000 housing units per year. And the reality is that even today, that number is not much higher than 600,000 or 700,000. So not only are we not building the 1 million to 1.5 million additional housing units that we need every year in the U.S., we are not making up for any of those lost years. So it is a supply and demand problem. There is a lack of supply and too much demand, and it causes all kinds of problems.